Hello traders, this is Blake Morrow with Forex Analytics and you're listening to the week ahead video for August 4th, 2024. I hope you guys and gals are having a great weekend. We got a lot to cover today. And you know, the question that everybody's asking right now is, can this market bounce back? And we're going to cover that. Obviously, we're going to cover that and more. And I want to talk about, you know, the carry trade. And is the carry trade dead? I mean, we really have to talk about what happened with the yen, with yields, and with equities, and that's so important to this week and what we're going to be doing moving forward. But before I get into all that, and remember, this is a very long video, so if you watch this about 3 hours or maybe 5 hours after it's been recorded and published, you should see chapters down below, so you can kind of scroll to where you want to get to. But I need to stop and I need to thank all of those traders that took advantage of the trader funding program. And I'm meeting with a lot of traders now and have been for the last couple of weeks because last month we had an offer that if you took a trader funding program assessment, you would have a one-on-one consultation with me. So on Monday, I've got 3 consultations that I'll be meeting with traders, and I've got more throughout the course of the week that I'll be doing. You know, this is obviously an opportunity for you guys and gals to access larger amounts of capital. If you don't have this readily available, or you maybe do have the capital, but you just don't want to risk it, the trader funding program is a great option for you. It's an option. You know, it's nice to have options because some of you may have thought you don't have options, and that's a fact. So having the option to access larger amounts of capital, not risking your own capital, and if you think you're good enough to pass an assessment, well, then check out the trader funding program. Like I said, I think it's a great option for you, and you know, take advantage of it. It's there for you. Now we are going to get into, you know, a lot of different parts of the market. I want to talk about really the 10-year, because this has been the linchpin of the market. And you guys recall a couple of weeks back, and even last week during the trade setups from last week, one of the top 3 trades that I gave you was long treasuries in the 10-year, the ZNs. Well, look what's happened with the ZN, and look at the breakout to the upside. It's been absolutely, you know, just jaw-dropping and this move, and you can see this huge triangle that is broken out. And you know, every market, and especially right now when you see aggressive moves lower in like equities, you know, everything's like a domino. It started off with, you know, bonds rallying, fixed income rallying, TLT, 30-year, 10-year, 2-year was taking off the notes, and then next thing you know, the BOJ happened, and then you got the yen moving, carry trade started getting decimated. Then that bleeds over to equities. Then that bleeds over to precious metals. Everything is interconnected right now. That's why it's so important that you're looking at so many different markets in today's environment. Now, the question that I originally asked is, you know, can the market bounce back this week? I think it can. But I do think that the bounces are going to be limited. So we're going to go into the technicals, and we're not just going to be looking at the S&P. We're going to have to look at other markets too, like what's happening with the Nasdaq, what's happening in the Nikkei, what's happening in the German DAX. You got to look at global equity markets, and you got to take a look at the bond market as well. So we're going to be taking a look at so many different things today. So make sure you all stick around. I also need to say this. If you believe that these videos are crucial for your preparation, your trade preparation going into next week, make sure you give me a thumbs up. Jump down in the comments below. Let me know if there's something that I might have missed, or maybe you agree or disagree on one of these setups that I'm talking about, or the markets that I'm looking at, or maybe you see something that I don't see, because that could help everybody else. So make sure you jump down in the comments below. I appreciate that. All of your comments, all of your, you know, positivity, the thumbs up, you know, sharing these videos on social media, all of that helps to get the word out. So we do appreciate it here at Forex Analytics. All right, so let's start off with what's happening in, you know, on Monday. So first and foremost, we have the U.S. And I'm going to come back to the yen, so don't worry, I'm going to cover this yen quite a lot. Let's cover first of all the euro dollar, because we have ISM services. Now, if you looked at the data from last week and you saw the manufacturing data, this is what stuck out to me. Let me get over to the manufacturing ISM, which I believe was on Tuesday, if I'm not correct. Let me see. we have to, it was Tuesday, there is the S&P, that was consumer confidence, maybe it was Wednesday. I guess it was Wednesday. So we have ADP, pending home sales. Was ISM on Thursday? It was such a busy week, as you all know. Oh, I guess it was Thursday. So on Thursday, I want to highlight some of the manufacturing ISM. Now remember, the U.S. we're a services economy, but manufacturing does matter. And you can see how the manufacturing data continues to slip in contractionary territory. But look at the prices data. The prices are going up and manufacturing is going down. I use the word stagflation, and Jim Welsh on Friday, he said he's like, I'm not quite there using that terminology just yet, but we're going to have the services data coming out this week, and it's going to be very carefully watched in the markets. I think it's going to be super important on Monday, so just keep an eye on that. Now, I want to talk about. I won't talk about like the actual setup from last week, but I want to show you what the euro has done and why we can start looking for a breakout or a potential breakout of the euro dollar. Now, if the ISM data comes in worse than expected, now the market is looking for ISM to come in sub 50. Now, let me make sure I got that number correct. The previous data came in below 50. Now we're looking for those PMIs to bounce back above 50. But how about if they don't? If they don't, and the market has high expectations this week, then what could potentially happen is we could see a move higher in the euro. And take a look at this bull flag pattern. And if it's not, and I actually got this question, and let me take myself off of here. I'm going to remove my picture off of here. I got a question last week from one of our traders. He said, "Hey Blake, is this flag? Is it still a flag pattern because of the length of the flag versus the flagpole? Because the general rule of thumb is if the flag is more than 50% of the flagpole, then it's not a flag." No, but I agree with that, but I think it could end up being an ABCD, which is basically the same thing anyway as a flag pattern. The fact of the matter is if we get above this triangle resistance, which is huge resistance in the euro that comes in around 109.50, there's a good chance that we're going to take on stops above 110. All right, so the move that we see here the move that we see here in the euro is really going to be dependent, in my opinion, on Monday. What happens on Monday with the ISM? Now we do have S&P PMI data coming out, but it's the ISM services PMIs that are going to really matter 15 minutes after the S&P. So just a heads up with that. Tuesday we have a lot. We're still in earnings season, and on balance, the earnings haven't been horrible. But there's a couple key earnings this week that I think we need to pay attention to. You have Caterpillar for obvious reasons from a commodities point of view. But you have Airbnb, and that's going to be watched really carefully. And I want to show you guys this chart because it is not, unfortunately, it's not very bullish. And if you look at Airbnb, take a look at this breakdown that we're seeing here. And I'm going to go into the daily chart, and I want to show you this. This is not pretty, and that sell-off started at the end of last week, and you can see we are in full retracement mode at this point in time in Airbnb, and it looks like we could break down towards the 618 retracement, maybe even further. Now Airbnb, since I live in such a real estate hotbed in Phoenix, or I live in Scottsdale, but in Phoenix, Arizona, there are a lot of Airbnbs that are just, people are underwater. I know a lot of people that own Airbnbs, and the problem is you got to watch earnings and listen to what Airbnb says, because these homes that are currently Airbnb could very easily turn into inventory, for sale, especially as unemployment continues to worsen here in the U.S. Excuse me. We could end up seeing more homes come on the market, and so listening to the health of Airbnb and the company, I think is going to be very important on Tuesday. Now, Tuesday night or Wednesday morning, we're going to have New Zealand employment. The Kiwi has had an aggressive bounce back, and I want to show you something because I had been looking at this chart more as a triangle that looks like this. But what happened this last week is we end up getting a false breakdown, or what's probably more significant is a potential double bottom setup. Now, I'm all about right now, and I'll just tell you guys this right now, and I'll go and look at the dollar index, obviously, but I'm all about selling dollars right now. And I'm not so much in the camp of buying commodity currencies. But when you have the Kiwi looking as bullish as it is right now, that's significant to me. It is very significant. That means that the dollar is really getting hammered when you have commodity currencies rallying in this type of environment when stocks are really under pressure. So watch the Kiwi, especially if we can get above this 60 cent level, this 38% retracement right here. We get above there and we are going to end up squeezing in the New Zealand dollar. Now, remember, we do have its employment data, and employment data is something that not only U.S. investors are looking at here for at U.S. labor data, but labor data globally is probably going to assist other central banks in making rate decisions moving forward. All right, so we have New Zealand employment. On Wednesday, we have, excuse me really quick, didn't mean to cough on you guys. On Wednesday, we're going to have Disney and we're going to have Shopify. Now, Disney's stock, these earnings. Now, Disney does not look good. Anybody follows like what Disney's been doing recently, they are, in my opinion, quite a bit of a disaster right now. And look at the stock; it looks like it's in trouble. You know, you break below the 78% retracement in Disney, and you're going to have some problems. But who else is reporting is Shopify, and Shopify is probably just as important to me. From looking at a consumer's, finding more information more out about the consumer globally, Shopify is probably just as important as Amazon. And we just got earnings from Amazon, and you can obviously see Amazon got crushed following earnings. So watch Shopify because, like I said, Shopify, and this is Canada's shining star right here. It's a huge Canadian company, but you can see very much like what we were looking at with Airbnb. You're seeing Shopify really start to break down, and the stock does not look super healthy. And listening to what they have to say, not only about their earnings, but what they have to say about the consumer globally is going to be very, very important. Now, speaking of Canada, we have Canadian IVPMI on Wednesday. So let's take a look at the dollar Canadian. Now, the dollar Canadian has been very strong. We are up against major resistance. You can see as we approach the 140 level. I tried to short this last week, and I took a loss. I was shorting it somewhere around here, around the 138.20 level. Ended up, getting out for a loss when it popped above this 161% extension. I know positioning is not the best in the Canadians because so many hedge funds are short Canadian dollars that they're expecting a big move higher. But you can't ignore the fact that it is prices leading us higher. And, if you look at like some of these extensions where we could possibly go in the dollar CAD, it looks like we can reach for the 140 level again. So mind the breakout. And I think this breakout is going to be synonymous or I should say parallel, or inverse, I should say, to U.S. equities. So if U.S. equities continue to sell off, the dollar Canadian will go higher. One of the bigger correlations that we've looked at over the years, for those of you that have not, take a look at I guess a weekly chart of this will do, and let's just add the VIX. And what you're going to see is every time you get a rise in VIX, you end up getting a spike higher in the dollar CAD. You can see this is during the financial crisis, obviously. But when you see spikes higher in the VIX, which is down below, the dollar CAD breaks higher too. It's very, very, very sensitive to volatility. So be careful because volatility has really been on the rise. And if you guys don't think that we look at volatility every day, you're wrong. I want to show you guys something. If you're in Forex Analytics, you're right here. You click on this button right here. It says go to chat room. You can click over here where it says chat room. This would give you an example of Friday. Friday I did, I do the analysis with Steve Vulgaris. We do the bias chart, for all of our clients. So it's on the morning edge. We basically build this chart that you see here. We look at all the key levels, figure out where they're at, which ones are the important ones. That's why we put asterisks next to them. Very important analysis that we do with our clients. It's a private show. For just the Forex Analytics community, but you can see I also posted in the chat room. Now, I want to show you that, this is on Friday. You can see all the conversations, and I believe, I said VIX, right? You can see the VIX popping, right? And, this is 8:30 or 8:13 in the morning, my time, which would have been 11:13 Eastern. I said, I suspect the VIX will come off these levels the rest of the day. Up 55% won't be sustainable, methinks. And, obviously, like less than an hour later, VIX had came off about 20% thus far, only up 39% on the day. And, that's just, and you can see here's what VIX did as soon as I alerted everybody of that. But the reason why I'm pointing this out is because volatility is a big part, and it's a big component of everything that we do in the markets. I know a lot of people get angry when you look at VIX and you try to match up chart patterns to it. Yeah, you don't have to do that, but really it's more important to know that if VIX is making an explosive move up or down, it's going to have an effect on how you're positioning yourself in the markets. If you don't know those simple concepts or those little tidbits of information, you should be in the Forex Analytics community and talking with us and all these other traders about what they're seeing, why certain things are important, why they're looking at whatever they're looking at, and take that into account and factor it in to some of the trading that you're doing. And again, to get involved in the Forex Analytics community, it's only $1 for 10 days to try it out. $1 for 10 days. Get in there and be involved in our community. I urge you. That's where you're going to see me. Obviously, when you're in here, you can see this is me highlighted in yellow. That's Blaker. That's me. You can see, that I'm out there talking throughout the course of the day to everybody else, everybody in our community as well. And this is just one chat room. We have multiple chat rooms. You can see over here to the left. All right, let's continue on. So, we were talking about Canadian IVPMI, how important that is and how important this resistance is. I didn't finish and I'm going to go ahead and finish by saying this. If you look at the dollar CAD, we're above the 161% extension, and we've closed in breakout territory. Given the fact that we've closed out in breakout territory, you have to respect it. So we're above, let's just call 138.50. It looks like we're going to continue to stretch our legs towards 139, maybe even up towards 140. Now, I have at the very end of this show on the week ahead video, I'm going to talk about some of the best setups that I see for this week. One of them has to do with the Canadian, so make sure you all stick around for that. Is it the dollar Canadian or is it something else? Well, you're going to have to find out. All right. Now, on Wednesday, we also have a 10-year bond auction. And you guys, I obviously will talk about this during the setups portion, because one of the big setups from last week was the 10-year breaking out. And you can see the 10-year has not only broken out, but it has broken the fudgesicle out. That's what happened, is it broke out aggressively this last week. And you guys were all very well prepared for it. The problem with this is that as risk aversion comes in, as yields globally continue to drop, the yen continues to strengthen, this 10-year could really extend its legs towards 115. We could rally towards 117. I cannot tell you the amount of macro analysts that I follow that believed in their heart of hearts over the last week, 2 weeks, month, that the bond market would never rally again. And they may be right eventually, but not in the short term. In the short term, we are seeing yields crumble globally, not just in the US, globally. All right. Now we have a 10-year auction on Wednesday. On Thursday, we have a 30-year auction. So you should keep an eye on TLT. I learned something the other day that the TLT mixture is more of the longer end of the curve and the shorter end. But look at the TLT just ripping too. I mean, again, we have 10 and 30-year auctions Wednesday and Thursday. Speaking of Wednesday, let's wrap up Wednesday with Wednesday night. We have New Zealand inflation expectations. Thursday, really important for the peso. Now I'm going to stop for a moment. I want to talk a little bit about the Mexican peso. I actually shorted this one, believe it or not. You guys know, which is ironic because how bullish have I been in the dollar Mexican peso pretty much all year long? I've been extremely bullish, expecting higher prices. And on Friday at the end of the day, I tried selling it just above 19, thinking we might fall by the end of the day. I ended up closing it for a loss. I ended up taking, I think I sold it at 1902 and I covered it at 1913, somewhere around there. Yeah, I said, no, screw that. I don't want to be short. My bias is bullish. But more importantly, look at the dollar MEX and what it's doing. This is one of those that on Sunday, it's going to be facing major resistance. Now, if you zoom all the way out, you'll notice I have a big resistance zone coming up. What's the biggest and most important level for me right now? It's 1991, or basically 20. It's the 38% retracement of this entire move. So obviously that's going to be really key. It also coincides with the 161% extension here. But it's not just the dollar max, it's the euro max. I got asked today on Twitter, this is first thing in the morning on Saturday morning, I had a trader ask me, hey Blake, what are you looking at for risk off? I'm like, I'm focused mostly on the peso. This has been one of the best carries in the FX market. So you got to watch the peso. If the peso continues to move lower, then that's going to tell you that there's still risk aversion in the market. Now this week, you kind of got to put that idea on the back burner on Thursday, because we not only do we have Mexican inflation, we have Banxico. Banxico is expected to keep rates steady at 11%. But I don't know. They could cut rates. That would be a surprise, obviously. But be watching the dollar MEX and the euro MEX as we get into the second half of the week. Thursday night we have Chinese PMIs. Friday we have Norway inflation and PPI. So we have CPI and PPI basically for Norway. Keep your eyes on the US dollar Norwegian krone. We talked about such a massive resistance at this triangle trend line 2 weeks ago, and guess what? We held it. Can we break out? Well, if risk appetite continues to turn south and we continue to see selling in stocks, we could actually end up seeing a very big spike higher in the US dollar Norwegian krone. So talking about Thursday, if the inflation data is weak, both consumer and producer inflation is weak, we could end up getting a screamer on Friday. Now, the last thing happening on Friday is going to be the Canadian jobs report. So instead of looking at the dollar CAD, which I just did with you, I want to take a look at the Canadian yen, because the Canadian yen has been 100% decimated. Not only you got the New Zealand yen, Aussie yen, but take a look at this Canadian yen. Let's do a little bit of work here, because obviously if you look at the daily RSI, we are very oversold. So what I'm going to do is I'm just going to take a look at, well, a couple things. Let's just draw this, since obviously I haven't done any work on this chart for the week ahead video ever with you guys. So, well, maybe in a month or 2 or 3. So if you take these lows, go to this high. And by the way, if you want Canadian yen analysis, all you have to do is come over here and take a look at all of our notes that we keep on there on the Canadian yen, or any of these yen pairs, or all 30 instruments that we follow here. You can see there's a lot of them. All right, so with the Canadian yen, getting back into it, what you're going to notice here is when we're talking about the 618 retracement, that comes in right around this ascending trend line. So why is that important? Because if we continue to weaken, I'm assuming as we get close to this 103.50, we are going to find some sort of, at least, if not buyers, some sort of consolidation, maybe some two-way price action. Let me reiterate, the daily RSI is very oversold. So you look at the Canadian data at the end of the week. If it's weak data and yields are still dropping, that Canadian yen could, find support, or at least get towards this level, maybe even break. But at this stage in the game, we have to imagine that we have to look at selling rallies in the Canadian yen, and this is the level that I would be thinking, because we can't draw a fib right here because we don't know if that's the low. I won't know if that's a low until after the fact. So we could still move lower. That's why now we just have to look at rallies back up towards 108.60 as opportunities to sell. So on Friday, maybe the Canadian jobs report is good, and maybe yields have bounced a little bit, which would allow us an opportunity to sell into strength up around the 108.50 level. That's what I would be thinking right now. When you look at an asset that's just gotten decimated like this, if you're not in it, it's too weak to be bought, yet it's too oversold to be shorted, right? You don't want to be selling as it's just dropped. Well, what percentage-wise, what has that move been? Percentage-wise, we've dropped 11% in a couple 2.5 weeks. Yeah, chasing it down here is ridiculous. But that doesn't mean we can't be down 14% before we bounce. So, it's too weak to be bought, but too oversold to be shorted. So that's when you let the data come our way and see if you can find a better level to be playing this one. I think that if you look at these support zones and that resistance zone, I think these are giving you levels to really look at. 103.50 all the way back up to 108.50 to 109. All right, moving along. That's it for the week. We're going to have Canadian jobs, but there are still earnings. There's a lot of utility companies. There's a lot of pharmaceutical companies that are also reporting earnings this week, if any of them are important to you. Let's take a look at some other markets, like what's happening in the gold market, because gold had a really big reversal on Friday, and this was an intraday reversal that I wasn't expecting, because the dollar continued to weaken, because we saw, the euro break out above 109. I thought that gold would continue and try to trade towards 101 or 2,500. This sell order probably came from somebody who said, all right, I'm long a lot, and I know we're up against resistance, so I need to be careful. But I want to show you guys something. If you go to this daily chart, and let's just let's connect these highs right here. Connect this high, that high. Where does that take you? So it takes us to about 2,500. So I guess the point I'm trying to make right at this moment in time is how the gold reacts at the 2,500 level is going to be big. Because if you go out to a weekly chart, and let's just let's zoom out here. This is a long-term channel, right? And maybe somebody wanted to sell some, ahead of the channel because you're sitting at the channel top. I don't know, but for whatever the reason, we sold off and we recovered quite aggressively towards the end of the day. But still, it tells you that there are sellers up at these levels in gold. I want to also show you copper. Copper is trying to stabilize. We're finding the 50 DMA. I know I mentioned that a couple of it was like a week and a half ago, that you got to be careful down here as we're at the 200 DMA, that we might find some support. Well, we have been finding support at the 200 DMA. So for those of you that didn't think that could happen, it has happened. So I think if you take this, oops, not that. Let me put that back. If you take this like zone and you just kind of move it up around the 200 DMA, I think that's what you need to be looking at right at this point in time when you're dealing with copper. All right, another big mover this week, and one that's kind of surprised me. Not so much that the crude market was breaking down. Let's go take a look at crude oil. Let me find it. Where's my WTI? Oh, there it is. Okay, here's crude. Not the fact that it was weak, but the fact that it was because we were broken down below the 200 DMA. It still continues to be bearish. But more importantly, it's all of these headlines in the Middle East. I'm surprised hasn't spooked shorts. And what that tells us is that the fear of recession is bigger than the fear of, fear of global recession is bigger than the fear of, these events that are happening in the Middle East. Whether that proves to be right or not, I don't know. But I have to admit, I was pretty shocked that crude oil was as weak as it was. Okay, continuing on, I do want to talk, and I did mention it about the 10-year. Well, we'll come back to that in a bit. Let's talk about the equity markets. Let's talk about the S&P. So this is what a lot of people want to know. Are we going to be able to bounce in the S&P? Well, frankly, we got to our key level of resistance. We rejected it. What's most important about this chart, and this is drawings from last week, we hit that resistance zone, as we were mentioning, and we sold off. And so what that tells you is the underside of this trend line is vitally important for the bears to hold. Now, we are at a 50% retracement. You can see that this 50% retracement is also very, very close to this breakout point right there, and the 618 is very close to this low. So I'm going to go ahead and give you guys this zone here in the S&P. That to me is going to be the most important level or area to be watching if you're bullish. Now, I'm not saying that we're going to bounce from there, but if we're going to bounce, it's probably going to be from these areas, because if it doesn't and we break through 52, whatever that is, it's 52, 15, 13. We break through that. The next stop is really the 200 DMA. The next stop is going to be somewhere down here. So if this breaks, we should make a move for the 200 DMA. So if you guys are going to ask me, is this equity market going to bounce? I'm going to say we have to hold these levels. And if we don't, it's going to sell. I mean, the sell-off should continue. Now, if you want maybe further evidence that that's going to happen, you have to take a look at the Nasdaq 100. We closed below the 618 retracement. You look at the Dow. The Dow is in breakdown territory, or giving us. You could argue right here. Let's do this. That's giving us a false breakout. Take a look at the Russell 2000. We hit a fresh new high right here and reversed, and now we're back below the breakout point, which I would highlight is in green, which gives us a bigger false breakout. So if you're putting two and two together and you're like, okay, look at what's happening in the S&P, then the Nasdaq, the Dow, and the Russell, the risks are high that we continue moving lower. And I'm gonna say this, okay? Yeah, the stock market sold off, but from the beginning of the year, let's not lose sight of the fact that from the beginning of the year, here is January. This is January, first week in January, basically right here to where we're currently at. We're still up 12%, and I know we talked about last week. It was either last week or the week before last when we were up around 5,500. We were talking about going into the summer months. There's a lot of economic data. We have a big election coming up. There's a lot of people looking at the markets a couple of weeks ago that were saying, okay, we're up 15, 16% on the year. Now you're still up 12% on the year. So just keeping that into perspective, could there be some more downside before we get to the U.S. election? Could we see a continued drop towards the 200 DMA? The answer to that question to me is why not? Especially if you have other markets that are moving lower. Let's take a look at what's happening in the Nikkei. So the Nikkei not only made a false breakout, but then now we're below the major all-time high or previous all-time high breakout point. So that is one big, huge false breakout. And that's got to weigh on what Warren Buffett and some of the biggest investors in the world are thinking, that have been riding this Nikkei higher for, the last year and a half. I mean, if you've been trading long the Nikkei since, let's just say, 2023 sometime, you were up huge and you've given back a lot of gains, and now you got a false breakout that you're contending with. So keep your eye on the Nikkei. See what's happening in like the German DAX. The German DAX is under pressure. We came out of a wedge and we're breaking down. We're about ready to hit this 200 DMA. So again, if you really are asking the question, can U.S. equity markets stop and bounce? Keep your eye on different markets too, not just what's happening in the S&P. Take a look at what's happening in the Dow, Nasdaq, what's happening in the Russell, what's happening in the Nikkei, what's happening in the FTSE. After trying to reverse. I mean, if the FTSE starts breaking below 8,000, then you got a false breakout here. Next thing you know, you're trading back at channel support, which could be way down here at 7,600. So, it's not just one market. Keep an eye on all markets. Okay. One of the last things I need to do before I go into our review of the trades from last week and I give you my top 3 setups is I wanted to also talk about what's happening in Bitcoin, because Bitcoin is, still in this big major, you guys see I've got it set up as a big cup and handle pattern. But the fact of the matter is Bitcoin is actually trading, pretty heavy. And I have to admit that this 55,000 is going to be really big, because this is the channel resistance at 70,000. It held. So any dip back down here, you can see we're right on the 200 DMA right now, but any dip back down here is going to be watched very, very carefully. So just watch Bitcoin, because I am in the camp of LIFO, last in, first out for investors and institutions. And some of the newest products on the market for institutional investors are crypto ETFs. So if equities continue to sell off and they continue to move lower, you're going to have asset managers that look around and say, gosh, I've owned Apple for like 10 years. Don't want to sell that. I've owned Microsoft for, 30 years. Don't want to sell that. But this Bitcoin stuff, I mean, this crypto, like I'm in it, not positioned too well. I might be down a little bit. Do I want to keep Microsoft or keep crypto? It's already turning south on me, so let's just go ahead and get that one out first. Last in, first out, especially if equity markets start to turn really, really sour, which is entirely possible. All right, and remember, to stay up on Bitcoin, you can actually just follow the analysis that we do here on Forex Analytics, and just know where Elliott wave pivot points are at. Harmonic analysis where key levels might be in Bitcoin to look for reversals, or look at basic technical analysis and know exactly what we're thinking as far as Ethereum or Bitcoin goes. And you can see we have analysis that's constantly running. So let's talk, and let's take this moment to talk about the top 3 setups from last week, or the 3 setups from last week, and let's talk about the top 3 setups for this week. But I want to have a real quick discussion with you guys about trading psychology. I had one of my best weeks of 2024 last week. The way I slayed the yen, just to go into it for you, just if you guys will talk about, but I need to talk about the trade psychology behind it. Not so much about the trade itself, but where I'm at right now. If you remember last week, we talked about selling it, shorting it at 155 to 155.70. That was the setup from last week. Do you know what the high was right there? I believe, and don't correct me if I'm wrong, or we're going to find out. The high was 155.21. I got triggered at 155.17 while I was sleeping. I put in an order to sell at 155.17. I shorted it right at the highs, basically almost top ticked it, and I rode it all the way down to 153.20 maybe. And then I shorted it again, and then I bought it at 121 or 151, played it to the long side and reversed out of it, and then I left the dollar yen alone as we have come crashing down even further. Like I said, I had one of my best weeks of all of 2024 last week. Why is that important? Because why is it important to me? It's not the amount of pips that I made or the money that I made. It's because really I crushed it last week. Not in just the yen, but one of the other setups from last week was the euro. Said buy it at, I said here, my notes say buy euro dollar dips while above the 50 DMA, which is right here, which I did. I owned it at 108.30. And then I'm still in it as it broke higher, towards 109 and change. Never hit my stop, didn't get below the 618, and that's trade number 2. Worked out really well. Now, when you are hot as a trader, it's almost as dangerous as when you're cold. That means if you're having a losing streak and you're just taking losses, it's important to, what I always say is take the shovel that you've been digging the hole with, put it down, and stop trading when you're losing. But when you're making money literally hand over fist in trades, and that's kind of the week that I had, it's also important to push your chips back into the dealer or take a step back, cash out, and reset. Because what happens is, for me, and I know for a lot of traders, probably you too, is that you start getting more aggressive because you become a little bit too confident, a little too big for your britches. And when that happens, that's when you will get hurt. So these are the types of things that we have conversations all week on, not only the F.A.C.E show, which obviously you guys can go to the F.A.C.E show, it's free, and the Flow show. But when we're on the morning edge, when we're on the daily roundup, we talk about trading psychology and situations like this, because it's important as a trader that you are aware. If you don't have awareness and you start getting aggressive and you start doubling up positions, and next thing you know, the market will show you who's boss. And I can tell you, it's not you. Sorry to burst your bubble. I'm not the boss either. There are traders and investors with so much more money than myself or you moving the markets. You are not the boss, nor am I. But when we're doing well, we tend to get in that mindset that we can do anything. But that's the most dangerous place to be. So just telling you guys that because I think it's important, especially if you had a great week. Same thing as if you were on the wrong side this week. Put the shovel down, take a step away, remove yourself from the market a little bit. All right. The last setup that we talked about was the 10-year. So the 10-year, we talked about the 10-year breaking out to the upside. And I says, ZNs, buy 10-year notes. Well, when you have the 10-year literally moving 3% in a week, that is the biggest move in fixed income you're probably ever going to see, or probably one of the top 5 moves that you'll see in your entire career. What happened last week? So if you ask me, did those 3 trade setups work? Really well. All right, so hopefully you guys did well last week. Okay, so this week, what am I looking at? So this week, first trade I'm going to be looking at is the Euro Canadian. I believe the euro dollar is in breakout territory, as you all know, and I'm still long. But look at the Euro Canadian. As long as we are trading above 150.50, the next stop should be 152 to 154. And that should be a warning for those of you guys that are trading the Canadian, US dollar Canadian. That means if the euro is breaking out, the dollar Canadian can still reach for 140, which is key resistance there. Next, Euro Swiss. But let me give you some fodder to this idea. We're dealing with the weekend right now, and I think, as you all know, this has been one of those trades that I've been waiting for this area. That's why I just removed that green thing. You know, here I've been waiting for this area literally since the beginning of this year. After I got out of my Euro Swiss when we were up here at 98 cents, I've been waiting for a dip back down towards 93, 94 cents to be involved. I already started buying some, right? But very, very small. I always tend to look on the glasses half full point of view, and I know a lot of you do not. So, you know, and it's fine. If you want to wear your, you know, tinfoil cap all the time, that's fine. I hope that, you know, tensions in the Middle East settle down? I do. But the way I'm looking at this is a big inverted head and shoulder pattern. So I wanted to be long somewhere down here. And as long as the tensions in the Middle East and there's no major headlines over the weekend, they don't continue to increase, I think buying the Euro Swiss down at these levels is a trade that you want to be in, especially with the Euro breaking out the way it is. All right, last but not least, trade number 3, dollar yen. Do I want to trade the dollar yen on the short side down here? The answer to that question is no. Are we near support? I think yes. If you take this low to the high, you can see that we have horizontal support right here where this dotted line is. 145 is going to be the 78% retracement. You go even a little bit further from retracement wise, you also have a 50% retracement. So I'm going to actually put 2 fib levels here so you can see the confluence. Excuse me. You can see the confluence of them both. The reason why I'm showing you this is because between the 78% retracement and the 50% retracement, I think that and this you know, dotted horizontal support zone, which lows here, lows over here, I think we can get a bounce, but I'm looking for a bounce to sell into. So what I think will happen is any rally back towards 150, I'm looking to sell. So in other words, I'm looking for a bounce to sell into. Okay, mind that 50% retracement. Mind the 78% Fibonacci level. All right, and let's see if we can find a rally to sell into this next week. All right, guys and gals, if you found this video to be beneficial in any way, shape, or form, make sure you give me a thumbs up. Give the team a thumbs up, and give them a thank you, because they're the ones that edit this, put it out on social media over the weekend. So you know, and I want to thank you all for taking the time, because I know it is your most valuable asset. It's not all the money you have; it's your time. Thank you for spending it with me. I do appreciate it. So thank you very much. I will see you guys on the F.A.C.E show on Monday, and I appreciate each and every one of you. Have a great remainder of your weekend. Bye-bye. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.